Link here first. The last couple of days, has it made you at all frightened of what could be to come?
No, not at all. I think this is healthy profit taking. I think what's going on here is this massive rotation from growth into value. And if you think about it, though, the Russell 1000 growth index, even after this pullback, is still up 21% year to date. The Russell 1000 value index is actually down 9%. The XLK is still up 25% year to date. And that doesn't even tell you the story, because you know that Apple and Nvidia and Amazon and Zoom, they're up 100 to 300, 400% from the March lows. So this is healthy. I think the rotation makes sense. And the reason it makes sense, Dom, is because the economic data continues to surprise to the upside. We are recovering faster than anybody thought. And today we got the non-farm payroll numbers. The last 4 months, U.S. employment actually has risen by 10.6 million. We've recovered half of the jobs since April and March and April. And this is on top of yesterday's data, where we've got better productivity, unit labor costs, ISM. So I have said for a while that there have been pockets of the economy that have actually been improving. Housing, auto, parts of consumer manufacturing. Now you're seeing better job numbers, and that's really very encouraging. Still have a long way to go, but that is very, very encouraging to me. And I think that we are going to continue to see progress into next year, and that means better economic data, better profitability, and cyclicals and economically sensitive stocks should work better. I'm not abandoning technology, but I think they're up so much they could take a pause, and maybe the new leadership will be the cyclicals for the time being.
Is this, Jim Lebenthal, a matter of new leadership, so to speak? We've highlighted so much that it's been within the S&P 500, technology, consumer discretionary, and communication services that have far and away been the leadership in the S&P 500. And amongst those, just maybe 6 or 7 stocks that have really been powering the gains. Is now the time that there is a real rotation out of some of those into more of the names that we consider value-oriented? We've seen this show play out in the past, and it never really comes to fruition.
Yeah, this is probably the 6th or 7th time that we've had a maybe rotation. I hope it is a rotation. I certainly have plenty of value names in my portfolio, but here's what my concern is, and I voiced it earlier this week. You want that rotation to come during a positioning of strength in the market. If it's simply that the value names don't go down as much as the technology names in this rotation, meaning the whole market is coming down, that's pretty much cold milk for me. I mean, a lot of these value names, you look at financials, they are still way, way under their highs. They're down on the year. Same is true, of course, of energy, a lot of material stocks as well. So you'd like that rotation not to take the form of the technology stocks getting pummeled. Now, on that front, let me just say this. It's way too early to get freaked out. Nobody that I talk to in a professional sense, other money managers, is getting freaked out. I hope that our watchers are not getting freaked out. I want to remind everybody that many people, including me, have been saying for the past couple of weeks, you know, we're due for a correction, wouldn't mind a little pullback to put some cash to work. If that's what we're getting, then we can't fall into this trap, this behavioral trap of saying, "Oh my God, the sky is falling. I'm not gonna buy stocks." And in that light, I want to point out that last week I said, you know, Visa is a name I'd like to add if it got below 200. So thinking about it this morning, it got just about 200, and I decided to pull the trigger. You know, I've had some cash on the sidelines. People know that. Visa is a high-quality name that as the economy continues to pick up, this is to Stephanie's point, consumption will continue, and Visa should perform very nicely in that regard. So I'm happy to have picked it up at about 201 today. And if the markets continue to go down further, I have my shopping list. I will not be afraid, and I will put money to work.
So, all right, let's talk about shopping lists. Shannon Saccocia, I mean, you take a look at the parts of the market that are the most impacted. They're the ones that have led to the upside. They're the ones that are leading to the downside right now. What exactly goes on the shopping list if you're a constructive? Because that sure as heck doesn't feel like a panic right now. The reason why I say that, we mentioned it yesterday on this show. There are other parts of the market that would be panicked if there was an overall sense of panic. Why are government bonds right now selling off? Why are interest rates going higher? Why is there no stress in corporate credit right now? There's other parts of the stock market that aren't selling off nearly as much. It seems to be that this is perhaps just the healthy pullback variety? What goes on the shopping list?
For most investors, the challenge is going to be here is that there is going to be a pull to go into these names or add positions to these names because they've been such big winners over the last 6 months. And I've continued to feel that this is a defensive trade. The trade into tech is defensive. Strong balance sheets, a lot of cash, ability to be somewhat insulated from the global pandemic in terms of revenues and earnings. And so I think if you're looking at this right now, if you don't have a position in a market leader like Microsoft, maybe you feel a little bit better about buying it after a couple days of a dip. But more importantly, I think that you do want to make sure that you're looking at those cyclical sectors and looking at quality companies there. I think the shopping list is not all that different, but perhaps this rotation away from technology will offer people the opportunity to look outside of the tech sector and communication services, for that matter, to other parts of the market. And so I think this creates an entree for investors to become a bit more diversified. It probably offers an opportunity to have discussions about diversifying concentrated positions in the FANG-M names and being able to put that money to work in other areas of the equity market, which, to Steph's point, if we continue to see momentum on the economic front, there probably will be a few missteps, and we expected September to be a bit choppy for that reason. However, there continues to be the dual tailwind of both monetary stimulus and fiscal stimulus, and economic growth and inflation moving higher creates an opportunity for financials. Growth in general creates an opportunity for materials and industrials. So I would say what goes on the shopping list is probably being able to justify or have a source of cash for some of these more cyclical names that you might be eyeing for your portfolio.